Hello everyone and welcome to Capital Market Chronicles. If you are watching this video, then either you are unsure about investing or you want to know why you should invest in stock market. The common answer you hear from everyone is that you should invest because it will make you rich, which is bad advice in every shape and form. There is no guarantee that you will accumulate wealth just because you are investing. The idea that you get rich by investing is far from the truth. Now, you might ask, if I am not getting rich by investing, then why should I even consider investing? The simple answer is to fight effects of inflation. Inflation is primary reason why you must invest. Now, you might have another question. What is inflation? In simple terms, inflation is the gradual decrease in purchasing power of your money. For example, if a pack of cookies cost $5 today, then after a few years, it will cost $6 to $7 or even more. Inflation typically ranges from 2% to 7% annually and leads to a higher cost of living. If you don't try to combat the effects of inflation, you may find yourself in financial problem known as the inflation trap. Let me help you understand. Imagine you work for a very generous business that provides you 5% salary increase each year. Sounds good, right? But due to inflation, your purchasing power will go down every year. In other words, you will see increase of cash in your hand, but relatively you will be getting poorer. There are only two ways to combat inflation. First, get a job with higher earning potential, which is much difficult than it sounds. The second option is start investing wisely. The primary goal of investing is to safeguard your financial security in the long run against the adverse effects of inflation. Investing won't guarantee instant wealth, but it can help you build a solid financial foundation against inflation. You might have seen a lot of stories on news and internet about people who claim to have become super rich through investing. But these individuals represent only small fraction, around 2 to 3% population of global investing community. The reason is, investing is not a guaranteed path to become wealthy. Invest in stocks and become rich is myth that is promoted by brokers and news channels. Their business stays alive because of this misleading narrative. On average, successful investors can expect annual returns ranging from 11% to 15%. This range is generally sufficient to combat the effects of inflation and protect your purchasing power. While it's possible to generate substantial returns through investments, it's not a guarantee. If you aspire to build wealth, you will need to consistently achieve returns above 15%. To generate profit in range of 11% to 15% requires significant amount of skill set. The skill set required to achieve returns above 15% is no laughing matter. Acquiring skills requires a lot of hard work and time. And if you do not have time to acquire skills or you just don't want to acquire those skills, then mutual funds are there to help you. Country-based index funds like Nifty 50, Nasdaq and FTSE are usually considered as safe investing options in any capital economy. If you want to invest in industry-specific mutual funds, then they carry more risk. If you live in capital economy and want hands-off approach to investing in stock market, then index-based mutual funds are best options for you. But in case you want to learn art of investing, then our best recommendations are How to Make Money in Stock by William O'Neill and Trade Like Stock Market Wizard by Mark Minervini. If you are an average 9 to 5 worker, then these books are excellent investing guides. But if you are already a millionaire and still want to invest to acquire more wealth, then our best recommendation is One Up on Wall Street by Peter Lynch. You can find links to these books in description. In summary, invest to safeguard your financial future against inflation. While wealth creation is possible, it is not a certainty. Investing secures your financial future, and if luck is on your side, you might indeed accumulate wealth. However, it is advisable not to invest with unrealistic expectations of quick riches. A realistic approach to investing will save you from unnecessary frustration. If you are still watching this video, then we assume you found this information useful. Comment to let us know your thoughts. Have a nice day.